I know what you're thinking. Sure, these principles work on lower timeframes, but can they stand the test of higher timeframe analysis? This example answers that question with one of the most impressive calls I've ever made, proving that these concepts don't just work, they're timeless. Back in August 2022, I posted a video on YouTube predicting silver would climb to the mid $30 range after hitting my expected price of $17.50. This right here is a VSA shakeout, and what this is doing is grabbing liquidity for all the early buyers. And then what did we see? We saw that price went ahead and took off drastically to the upside. Obviously, this was during the whole pandemic, and I'll probably do a separate video going a little more in depth on this pair, basically, because there's a lot going on here, especially VSA wise, with the volume of what was happening here and how I know that this will eventually go to the upside. So as you can see already from my markup, I'm predicting that price should continue to the upside. 2 years later, not only did silver reach those levels, but it also set a 12-year high of $35. That's a 100% gain from my entry and a solid 75% from when I published that prediction. Let me prove it. If I search my computer for a folder titled The Great Silver Accumulation, you'll see it was last modified on December 22nd, 2020. Inside that folder are charts I published on TradingView as far back as July 2020. The first chart shows where I began tracking silver, right after a climactic shakeout candle reversed the price trend. Weeks later, as silver hit $30, I anticipated a retracement to the highest buying volume level between $17 and $16.62, something I annotated clearly at the time. Fast forward 2 years, and silver lands at $17.55, just 4 cents shy of my projection, forming a bullish harmonic Gartley pattern. This coincided with the release of my YouTube video, and the rest, as they say, was history. Now, let's break it down. If you've paid attention to everything we've covered so far, this trade should make perfect sense. Right at the pandemic's start in March 2020, silver saw a massive sell-off on climactic volume, dipping below a double bottom. Early buyers and weak holders were shaken out, and this was where smart money made their move, scooping up positions at dirt cheap prices. From there, the market broke above a long-term downtrend that had been in play since 2012, signaling that smart money had clear intentions to drive prices higher. Silver retraced to the high of the climactic shakeout candle, landing at $17.55, which became the last point of support before a parabolic rally to its 12-year high of $35. This wasn't just a trade for me, it was an investment. I've been accumulating physical silver for years, and this analysis was a key factor in my decision to build and top up my positions. This final example ties everything together, from recognizing climactic action and shakeouts to spotting smart money accumulation, to understanding how markets signal a true change of behavior. This is the blueprint for success, whether you're day trading or investing. We've dissected examples across different timeframes and instruments, proving that the principles of volume, value, and volatility, the Market Trinity, and the 7 key metrics aren't just theory. They are a practical edge.